As of this very moment, Friday, December 5, 2025, shares of Strive Inc., trading under the ticker symbol ASST on the Nasdaq, are exchanging hands at approximately $0.94. The stock is currently navigating a downward trajectory for the intraday session, showing a decline of roughly 3.6% from the opening bell. Watching the tape right now, you can see the volatility is palpable. The price action is choppy, oscillating between intraday lows of $0.93 and attempting, but failing, to reclaim the $0.98 level. Most investors looking at a sub-dollar stock chart see a company in distress, a penny stock that has likely lost its way or is on the brink of irrelevance. That is the expectation. You see a price tag under $1, and your brain immediately categorizes it as a lottery ticket or dead money. But here is the reality, and it is a stark contrast that should make you sit up and pay attention. You are not looking at a failing company. You are looking at what might be the most aggressive, leveraged bet on Bitcoin and the anti-ESG movement currently available in the public markets. This isn't just a penny stock. This is a company that has fundamentally altered its DNA through a reverse merger and a massive strategic pivot to become a Bitcoin-Treasury company, modeled explicitly after the playbook that turned MicroStrategy into a giant. While the market sees $0.94 stock, the insiders, including high-profile figures like Vivek Ramaswamy, are seeing an asymmetric entry point into a firm that is hoarding digital assets while the rest of the market is distracted by the Magnificent Seven. The disconnect between the penny stock optics and the Bitcoin-Treasury reality is the single most important anomaly to understand right now. To truly grasp what is happening with the price action today, we have to look beyond the simple red percentage figure. The drop to $0.94 is not happening in a vacuum. It correlates heavily with the broader crypto markets, which have seen Bitcoin dip recently, dragging down high beta plays like Strive. When you trade ASST, you are effectively trading a leveraged derivative of Bitcoin itself, but with an added layer of corporate execution risk and political sentiment. The volume we are seeing today, over 24 million shares traded, tells us that liquidity is flowing, but it is a battleground. Sellers are punishing the stock for the recent crypto volatility, while buyers are stepping in, likely anticipating that the company's aggressive accumulation strategy will pay off in the long run. We are seeing a classic shakeout of weak hands who bought the hype without understanding the volatility of a treasury strategy. When you look at the broader market context, it is fascinating to see how retail investors are approaching this. Many are likely logging into their Robinhood app or checking Robinhood crypto prices, seeing the dip in the major tokens and panic-selling stocks like ASST that are proxy plays. But if you look at the institutional flows, the story gets more complex. We know from recent filings that insiders have been purchasing shares, which is often the strongest signal you can get in a small-cap environment. While the retail crowd on Robinhood stock trading forums might be complaining about the price dropping below $1, the smart money is calculating the book value of the Bitcoin on the balance sheet relative to the company's enterprise value. This is where the opportunity lies, in the gap between retail panic and fundamental asset value. Let's discuss the mechanics of how you might be engaging with this stock, because the platform matters. If you are using Fidelity Investments, you might have access to deeper research reports that outline the risks of these micro-cap treasury plays. Fidelity brokerage accounts often provide better visibility into the bid-ask spread, which is crucial when trading a stock like ASST, where liquidity can dry up or expand rapidly. On the other hand, if you are using Schwab Intelligent Portfolios or similar online investment tools, this stock likely doesn't fit the algorithm. It's too volatile, too new in its current form, and too politically charged for a standard intelligent portfolio. This is a stock for the individual brokerage account holder who is making active decisions. not for the passive investor relying on investing sites to build a safe retirement nest egg. It requires a level of self-investing discipline that most robo-advisors simply cannot provide. The narrative driving Strive Inc. is potent. Originally known for its asset management arm, Strive Asset Management, the company made headlines for challenging the dominance of BlackRock and Vanguard by opposing ESG mandates. The thesis was that corporations should focus on excellence and profits, not political agendas. That was Act 1. Act 2, which we are in now, involves the company going public through a merger with asset entities and pivoting to holding Bitcoin on its balance sheet. This is why the comparison to Tesla stock or Nvidia stock is irrelevant. Those are operating companies priced on earnings growth. Strive is being priced on its balance sheet architecture. When you buy Apple stock, you're buying iPhone sales. When you buy Strive, you're buying a management team that is raising capital through debt and preferred stock to buy Bitcoin, betting that the digital asset will appreciate faster than the cost of their capital. This brings us to the recent news regarding their SATA preferred stock IPO. This was a critical moment. By listing a preferred stock, ticker SATA, Strive effectively raised capital without diluting the common shareholders, ASST, as heavily as a secondary offering would. They are using this money to buy more Bitcoin. This financial engineering is what excites the bulls. If they can borrow money at, say, 12%, the dividend on the preferreds, and Bitcoin appreciates by 20 or 30%, the spread accrues to the common stock. That's you, the holder of ASST. This is the exact mechanism that Robinhood Investments users saw play out with other crypto proxy stocks. However, the risk is massive. If Bitcoin trades sideways or drops, the company still owes those dividends and the leverage works in reverse, crushing the common stock equity. That is the fear hovering over the price today. If you are sitting there with your SoFi Invest app open, wondering if this is a buy, you need to understand the sector rotation. Money has been flowing out of speculative tech and into safer havens, but crypto remains a wild card. SoFi stocks and SoFi ETFs generally lean towards younger, tech-savvy demographics who are comfortable with this risk profile. But even for the most risk-tolerant SoFi trading platform user, ASST represents a unique challenge. It's not just a tech stock, it's a financial firm, a crypto treasury, and a political statement all in one. The merger with asset entities also brought in a social media and community management aspect to the business, which adds another layer of complexity. They are trying to merge digital community engagement with hard asset accumulation. It's an ambitious, perhaps messy combination. Let's talk about the practicalities of trading this. If you are on Interactive Brokers, you are likely looking at the Interactive Brokers' fees for margin trading. Levering up on a stock that is already a leveraged bet on Bitcoin is akin to playing with nitroglycerin. The Interactive Brokers trading platform offers sophisticated tools to track the correlation between ASST and BTC/USD. And right now, that correlation is tight. When Bitcoin sneezes, Strive catches a cold. The Interactive Brokers account holders who are shorting this are betting that the company will burn through cash too fast or that the anti-woke marketing will fail to translate into actual assets under management, AUM growth. This is a valid concern. The asset management business is competitive. Going up against Fidelity mutual funds or Fidelity ETFs is no small feat. Fidelity Wealth Management has trillions in assets. Strive is trying to carve out a niche by being the anti-Fidelity, but they need significant inflows to make the economics work long-term. It is worth noting the political angle here because it drives the sentiment. Vivek Ramaswamy's involvement attracts a specific type of investor, one that believes the U.S. economy is being stifled by regulatory overreach and corporate social engineering. For these investors, buying ASST is almost an act of protest as much as it is a financial decision. They are bypassing the traditional Fidelity IRAs or Fidelity mobile app suggestions and actively seeking out a counter-narrative. This creates a floor for the stock price because these investors are less price-sensitive and more mission-driven. However, the market is ruthless. Sentiment can support a price for a while, but eventually the math has to make sense. The company needs to prove that its Bitcoin amplification strategy can actually deliver returns superior to just holding Bitcoin in a cold wallet or buying a spot ETF. Now, pause for a second and consider your own position. This is the part where you need to engage with the reality of your portfolio. Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for it to drop lower before entering. Are you in this for the Bitcoin leverage or the Ramaswamy factor? I want to hear your rationale. Returning to the analysis, let's look at the Semler Scientific